In 2022, the SEC showed it's more committed than ever to protecting U.S. consumers from the shady product offerings of crypto companies. The latest news has shown that it plans to continue the push in 2023. New charges filed against Genesis and Gemini are the latest examples of the SEC's renewed focus on crypto. But what are the changes? How will they be resolved? And what does all of this mean for investors? We'll answer all of those questions and more in this video, so keep watching to learn more. What did Gemini and Genesis do? It's helpful to begin by first looking at what investment product led to these charges from the SEC. The program, which was offered by Gemini, was called Gemini Earn. It was a crypto asset leading program. Essentially, a user who held their crypto on the Gemini exchange could sign up to allow Gemini to use that crypto for various investment strategies. In exchange for that, the user would get a cut of the profit, while Gemini would keep the rest of what it made. However, in November 2022, Gemini put out a statement that said that Gemini Earn users would not be able to withdraw their assets from the program due to liquidity issues. As of the time of creating this video, those users have still not been able to get their assets back. This is likely what prompted the SEC to file its charges against Gemini and its parent company, Genesis. As we essentially saw, around $1 billion in customer funds totally vanish. Breaking down the charge. The SEC has charged Genesis and Gemini with the unregistered offer and sale of securities to retail investors through the Gemini Earn crypto asset lending program. But what does that mean exactly? Basically, when you sell a security to the public in the United States, you need to go through a series of disclosures designed to ensure the product is safe for retail investors. With this charge, the SEC has said that the Gemini Earn crypto asset lending program was a security and that Genesis and Gemini need to go through the proper disclosures before offering it to the public. Genesis and Gemini, on the other hand, are sure to argue in court that the SEC is wrong, that its Gemini Earn lending program was not actually security, and that it didn't need to make any disclosures before offering the investment product to the public. At the end of the day, a judge will need to make a decision about this point. They will look at the legal precedent and statutes that govern this legal area, listen to lawyers argue their cases, and make a decision that will result in either Gemini and Genesis paying a hefty fine or not. Will Gemini Earn investors get their money back? It's likely that Gemini will find a way to get its Earn investors their money back at some point, but it may not be for a while. In fact, this case may need to play out before the money can be returned. If Gemini is found guilty, then the fines that it receives could be large enough to place it into bankruptcy. At that point, a court-appointed liquidator may have to comb through the Gemini and Genesis books to liquidate all remaining assets and pay out the victims of this alleged financial crime. This is the same process that FTX is going through right now with its asset book. Of course, there's no guarantee that investors on either platform will be made entirely whole, but the courts usually try to take care of retail investors first when these companies liquidate their holdings. At the end of the day, this case is yet another reminder that the interest offered by crypto holding companies is rarely free. You assume some risk from these brands when you allow them to use your assets for their own investment strategies. What do you think about the SEC's charges against Gemini and Genesis? Will they be successful and force Gemini into bankruptcy, or could we see another solution? Comment your answer below to let us know. If you're interested in learning more about crypto, the metaverse, and NFTs, make sure to obliterate that like button and subscribe. Thank you for watching Metaverse Memo. Until next time.